Hello everyone, welcome back to Rajeshwari's Commerce and Management Study Hub. I am Rajeshwari here. Let us discuss today depreciation under section 32. Here, what do you mean by depreciation? Let us understand first the meaning of depreciation. Depreciation means gradual or continuous decrease in the value of asset is called as depreciation. It is because of wear and tear, obsolescence, change in technology. These are all effects on the depreciation. Why this depreciation? We have separate section called 32. See, it is depreciation can be claimed for a deduction. Company they can business if they are using in the business or in the profession, they can claim for the depreciation. That is why this section we are separately studying as a depreciation. Now there are certain conditions to apply or claim the depreciation. What are those conditions? First, the asset must be used in the business or profession. You should use that asset, particular asset in the business or profession. It can be an active use or it can be a passive use. What is active use? Active use means actual use of the asset is called as active use. Passive use means the asset is ready to use. It is there. The presence of the asset is there but not put to use. That is called as passive use. Then asset must be owned by the owner of such asset. It can be wholly or partially, but it should be owned by the assessee. And there are certain conditions. Depreciation will be allowed only when the asset is used or put to use. Put to use is very important here. Now you purchased one asset on 1st April, but you have put to use on 1st June. Then depreciation will be calculated, considered from the 1st June, not from the 1st April. That is why put to use is very important. And depreciation allowed to beneficial owner also. We know what is the meaning of the asset. Meaning of the asset means when he is not only own the asset, when he have using particular asset for the economic benefit. So when the beneficially use owner using the particular machinery, then that is also considered for the depreciation. And depreciation claim is mandatory it is. And no, there is no depreciation on land. Always land only appreciation. There is no depreciation on the land. In case of lease of asset, leaser is entitled for the depreciation. Now, depreciable assets divided into two parts. Depreciable assets. Depreciable assets are divided into or classified into two. One is tangible asset and intangible asset. Under tangible assets, we have building, furniture, plant and machinery. Here, intangible assets, we have know-how, patent, copyrights, trademark. There is no goodwill. On the goodwill, depreciation will not be charged. That is why goodwill we are not considering under the intangible assets. Here you can see there are block of assets under section 2 subsection 11. Block of assets means the same nature of assets is listed under the blocks, each block, that is called as block. The asset must be, what are the conditions for that? The asset must be in the same nature. Tangible assets like building, machinery, plant or furniture, and intangible assets like know-how, patent, copyright, trademark. Based on this nature of the assets, they are divided into block of the asset. The rate of depreciation on such asset must be same. If they are similar nature, the rate of depreciation is also same for that particular asset. Now, the block of asset. Before that, we will understand what is the format for computing the depreciation. First, we are taking the WDV of the block beginning of the previous year. Previous year, because here we are computing it for the assessment year, then previous year opening balance will be WDV will be considered. To that, add assets if they acquired any asset during the year, that is purchases. If they have done any additional purchase of that particular asset, then that should be added. Then we'll get from that, we need to minus sale proceeds. If any asset is sold or part of the asset is sold, on that amount that should be minus, then we will get written down value. On this written down value, we are calculating depreciation as per the block of asset. The percentage applicable will be calculated. Then that will be after minusing the depreciation, whatever you will get the balance, that will be opening WDV for the next year. WDV means written down value. Written down value. As I already said, here asset acquired during the previous year will be considered. Acquired earlier previous year. Acquired during the previous year, it is put to use during the year. If it is put to use during the year for a period of less than 180 days, then only 50% of depreciation, half percent of depreciation. Example, if 10% is there, means if put to use is after 3rd October, 3rd October means less than 180 days or less than 6 months, then it will be considered only half percentage. Out of 10, 5 will be considered as a percentage. For the period of 180 days or more, then complete depreciation will be calculated. For the period of less than 180 days, same applicable for the assets acquired earlier to the previous year also. Here we have the block of assets. This is very important. Note down this one. Now building. Building, if it is used for the residential during other than hotels and boardings, only residential use, that residential use of building will be 5%. Depreciation is 5%. Then building, if it is for non-residential building, godown, office, factory purpose, if you are using, then it is 10%. Building, now temporary constructions are there, no? The temporary construction building will be considered 40%. So see, building all comes residential is 5%, non-residential buildings used for office purposes 10%, temporary constructions it is 40%. Then furniture, any furniture including electrical fittings 10%, plant and machinery, or ships, vessels, speedboats, these are all 20%. Plant and machinery 30% for motor car, including lorries and buses. Plant, plant and machinery 30%, motor car other than used in business, running them on higher. Then it is 30%. Then plant and machinery 45% we have. See, in plant and machinery we have different natures that you have to keep in mind. That is plant and machinery 20% for ships, vessels, speedboats, 30% for motor car, for that is lorries and buses, 30% for motor car other than the used in the business, running them on the higher basis, that is used between the 23rd August 2019 and 31st March 2020. 45% for the motor car, buses, motor lorries, motor taxis used in the business, running them on higher acquired and but to put to use between 23rd August 2019 and 31st March 2020. Then computers, books owned by professionals, 40% depreciation will be calculated. That also comes under the category of plant and machinery. So only we have seen under tangible assets, we have only three types. What are that? Building, furniture, plant and machinery. Because land is not coming. On land we are not calculating any depreciation. Plant and machinery 15% for oil wells. Plant and machinery 15% for in general anything. Intangible assets All intangible assets acquired after 31st March 98, it is 25%. This is about the block of assets and their rate of depreciations. And here one more thing you need to keep it in mind, that is, if cost of assets purchased, put to use but not used during the previous year, then there is no depreciation. On cost of asset put to use less than 180 days but put to use after 3rd October, then half of the depreciation will be calculated. On balance written down value, complete full rate of depreciation will be calculated. Here you need to remember 180 days. And additional depreciation we have. Additional depreciation is if assessee is engaged in business, manufacturing or productions, any articles or generation of power, distribution of power, transportation of power, any new purchase during the year, additional depreciation will be charged 20%. If it is put to use up to 3rd October. 3rd October, why we are taking? Because it comes more than 180 days, 6 months. If it is less than 180 days, that is less than 6 months, then 10% will be on the actual cost, which will be calculated. Balance of 10% will be allowed in the next year. Additional depreciation will be following cases. What are the cases? Following cases additional depreciation will be allowed, that is second hand in used plant and machinery, plant and machinery installed in the office premises and or residential accommodations, ships, aircraft, then road transported vehicles, plant and machinery which 100% deduction is allowed under the profit or gain from business or profession. This is about the depreciation. I hope you all understood depreciation. Thank you for watching. Have a great day.